Hey folks, and welcome to the Pipnotic Symposium for the 18th of August 2020. Today I'm going to run through the currency strength software and show you the expert advisor that is going to be released here within the next week or two. And so the currency strength histogram is essentially the core of, or rather the currency strength softwares, both the GFX and the histogram, essentially are the core for all of the other pieces of software that calculate and display currency strength readings. We have the histogram, we have the GFX, and that's what we have at the moment. And I'm also introducing a new tool for customers that have been with us for at least 6 months. And this is simply an expert advisor, which is trading based on the core of the rest of the currency strength software. And so how I'm using it is, after I've downloaded and installed all of the historical data for all of the currency pairs that I have on my trading platform, not all of them, just the ones that we can see here. So we have the euro, the dollar, the pound, the franc, the Canadian dollar, Japanese yen, Aussie dollar, Kiwi, and the Singapore dollar. And so what it's doing is it's looking at all crosses of all of those currencies, and it's using that to calculate an index for all of them. And then for the histogram, it's looking at the currently active chart, so the euro and the American dollar, calculating index, whatever, is subtracting one from the other, and then it's feeding the histogram information into a simple quantitative model that's showing us extreme deviations from a mean, and we have an average here. So if the orange line or the yellow line is above the zero line, price should be going higher. If price pokes into this area here, the red line, we can expect it to move away, so price to move low, and if it pokes into the green line, we can expect it to move up. Okay, and so what it's doing is it's doing that, and the current configuration, which is the one that members will receive, is scanning, and I'll show you what it's doing. It's scanning. The default setting would be entry time frame is going to be the current chart. Okay, but you can set it on a static time frame. Let's say that you want to scan all symbols in the market watch, so all of the ones that you can see here on the monthly chart. You can simply set it to MN, and it'll scan monthly currency strength data. But if you want to do it on the active chart, you simply put current. Okay, and the settings here are the same from the histogram. We have the mean periods, we have the modifier, we have the look back. So if you just set that to like so, and I'm just going to show you, like it just opened a couple of trays. This is just a couple of examples where what I've been doing is of course I've made sure that all my historical data is downloaded. And then what it's doing is that I'm just iterating through these by one. And so I'll simply go through the time frames. And so first of all, from the monthly chart, it's going to read monthly data, and it's going to look at all of these, and it's going to look for the ones where we have currency strength divergence occurring on the monthly chart. If we don't have any, then nothing's going to happen. And we go to the weekly, it's going to do the same. Okay, so now it's looking on all of the monthly data. And notice here that on this pair here, the American dollar, the Euro American dollar, it's sold at this weekly supply here. So that's a really nice overlap. Okay, despite the fact that we have enormous weakness in the American dollar, normally when you get price moving into a supply like this, and this supply was capable of really moving price away, well, then normally you have some kind of a reaction. So this occurred at the overlap on the weekly chart, which was quite nice. Okay, and then we had, then I'll go to the daily chart, and it's scanning all of them for the daily chart. Okay, I'll give it a minute to load, and then I'll go to the 4, and I'll just keep doing this until I've covered all of the time frames that I'm interested in trading. Okay, but one thing that's really important is that you focus on, you don't get too excited about what you allow it to trade. So I'm allowing it to trade one position per pair, and it is exposing itself to two currency crosses where, for example, the American dollar is exposed in both of them. Okay, so it's trying to limit its exposure to currencies and currency pairs. And so I just let it do that, and it's a really handy tool, because what I'm doing is I'm essentially, let's say I like to trade on the 4-hour chart. I'll go to the 4-hour chart, and I'll simply just scan the charts one by one like so until I find something that looks nice. And let's go back to the euro one. This was an interesting one. and that, so this was a daily. This was a daily area on the euro American dollar. You could see that price was reacting on that weekly supply, and because of that, I said, okay, good. So I just turned it on. You can see here, I just click the enable auto trading, and then that switches the robot on, and then it starts opening trades. Okay, and so it opened it just here, as you can see. These are just small trades, just to show some examples, and then it'll just hold the position over until either we hit a stop or the target, or the trade is closed manually. But notice as well here, you can see that, I mean, the histogram has really poked into this positive extreme deviation here, and so we can expect price to slowly move down. This is also getting towards the end of the European session, and this is a good thing. I find that if you do this on Monday mornings, very early when the sessions open on Monday morning in Asia, you'll find that currency pairs will gap. And so if you switch this on at the open of the Asian, those huge gaps will get caught, and gaps normally always close unless something crazy has happened. And so it's opening positions against the gap. In other words, it's opening position in expectation that the gap closes. And I'm doing this on the 1 minute chart, and so it's opening trades for a few minutes typically, and then I'm normally in and out of the trades in very, very short order. And it did this the other yesterday morning, and it did really well. So it's just a really nice way to automate the process of opening trades on a bunch of different currency pairs where we have huge gaps at the beginning of the week. But I also find that it works very well between sessions where it's a little bit quiet, because if we have a very strong euro at the beginning of the European session, or maybe that trend is going to continue throughout the day. And if that's the case, then we don't want to be standing in the way of that trade. But if it's at the end of a session, or if it's when London goes for lunch, or when London closes, or the American session closes, or sometime during the Asian session, well, then I find that it's quite a nice time to use the robot, because it's doing this at a time where there's not going to be follow through, which is essentially how the robot is working. Because in a situation where we have enormous volatility, one directional volatility, if the market is just moving in one direction, I mean, the robot's going to be selling into that buying, which is going to be negative. Okay, which is going to have a negative effect. So it's just nice to do it at a time when the markets are a little bit quiet. And so that's pretty much it. Just kind of manually going through these time frames one by one. Again, super important that the currency data is downloaded, and in the histogram installation video I show you how to do this, and so I recommend that you go back and have a look at that. But if we just run through the settings here, we have your product key. This is the same as your product key, and this is the one that does not change. This is your static product key. We have here we attempt to normalize currency strength data by averaging it. This is set to true. This just gives nice smooth data. We have look back, which is set to 30 periods. We have mean periods, which is 300, and the modifier is 2.5. We have time frames, and the entry time frame I prefer is for the current one. So it just slows things down a little bit and enables me to click through the charts and find the one that I want. Here we have for risk, I mean, I've set the static lot size to a micro lot just to show some examples for this video, but you can change this. You can set this to 0, and then you can say, well, I want to risk 1% here on my account. Then I'm going to do this, okay, 0.01. Okay, and here we have the stop multiplier and the target multiplier, and this is simply this is the volatility of the pair multiplied. So if we have a volatility of 10, it's going to multiply that by 3, and so we're going to have a 30 pip stop. And the volatility is relative to the time frame. So if we have a monthly chart, we have the monthly volatility. If we have the 1 minute chart, we have 1 minute volatility. Okay, then we have max lot size. If you want to just put a cap on lot sizes, and you can specify that value here. If not, you can leave it in 0. We have the stop multiplier and the target multiplier. Those are the ones I just explained. Target multiplier is essentially the same, just as a target, not a stop. Here we have pair exposures. We're only trading one currency pair. We have currency exposure. We're allowing 2. Stop multiplier. This is if it loses a trade. if it loses a trade, the next position it opens doubles the size of the stop. Okay, so in a situation that we have like a bull market where the market is flying north, if it takes a loss, the next position for that currency pair that is opened, it will multiply the stop size by 2, so it'll have a little bit more air, which will allow the position to kind of stabilize, the volatility to decrease, and increase the likelihood of the trade working out. Then we have no trade rules. Okay, so we have currency pairs that we're not allowed to trade. Default is Euro Swiss franc, comma CCC DDD. This is just an example. Currency trades, no trade currencies. Thai baht, the Indonesian rupiah. These are just examples. Okay, we have swap positives in the filters. If you set this to true, then it's only going to take trades where the swap is no less than -5. Okay, so if it's -6 and it wants to sell, and it's, let's say you'll have to pay $7 to hold the position, then it'll pass on the trade. Okay, but normally if you want to have only swap positives, then you can set this to 0 and it's only going to trade in line with swaps. Okay, then we have the enabled trend, and the enabled trend is simply looking at this. So as long as the orange line is above the 0 line, it's going to buy. If it's below, it's going to sell. And here we have the magic number. Okay, so that's pretty much it. And the cool thing about currency strength divergence trades is that normally price pokes into these areas, and then we have a bit of a shift in the flows. And I like this way because it really slows down trading, and it makes you realize that the shift in flows in currencies is a very slow process. So using this will teach you patience, which is one of the reasons I really enjoy using it. Okay, well, I think that's pretty much it for this. But this is going to be released in a couple of, maybe in a week or two. I'm currently doing some testing, as is a friend of mine, and then everything looks good, and we'll push this out here in a week or two. But again, this is available for members who have been members for 6 months or more, or if they sign up for a 6-month membership, and it's a giveaway. It's completely for free. There is a risk disclosure that you must read. You have to accept the risk related to this, and it is advisable to only use this on demo accounts. Okay, it's an educational piece of software. I want to teach you something about patience with the software. I want to teach you about the shift in flows between two currencies when price reaches these extreme readings. And so it's just a really nice piece of software that'll educate all of us as to how currency pairs move and how the flows move from one currency and move into another one. Okay, good. Well, I'm going to leave it at that. If you have any questions, please type them in the comments below or in the forum. And once again, thanks for watching.